live trading event brought to you today by David Kindley. That's me. Thank you for joining me, and let's hope it's a very good NFP to remember, the penultimate NFP before the presidential elections next month. So very interesting and very excited to see what the job sector has in store for America leading up to the general election. So just bear with me for a moment. So I'd just like to introduce myself for those that haven't seen any of my NFP videos before. So my name is David. I'm with Orbex, Market Analyst, and you can connect with me on the two links at any time. Feel free to send me any questions or any updates that we can talk about and get involved in. You know, the market never sleeps, even on the weekends. So very always open to any suggestions or any topics. Okay, so before we get started, just like to read a quick risk disclaimer. So foreign exchange trading and investment in derivatives, example CFDs, can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose or the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analysis supplied. So as we go on, let's take a look at the data coming out and let's see what happened last month. So analysts at the moment, they expect a decrease in the number of jobs created from last month. So this is quite a early indication that the economy is looking to slow down slightly. We've had over the last month that even though the virus has kind of come under control in America, they're not seeing record numbers anymore, well at the moment at least. The second wave is going over mainly in Europe at the moment, but in America it's kind of slowed down, but still on the job front there is expected to be a decrease from last month on the non-farm payrolls. So we'll have to wait and see. That will be coming up shortly. So August data, which was last month's release, was down by 119,000. So, you know, again, it's not so significant at the moment on that number compared to what we've seen in the last few months, where we were at, you know, record unemployment and we're slowly clawing our way back into better territory, let's say. So absence from work points to a less good jobs report. So like we just said, it's basically looking more likely that we're going to see a decline in the NFP figures rather than something positive. The jobless claims are remaining below the 1 million bracket at least. They were up slightly to 837,000 in the last jobless claims release. So that is something that we've seen that's slightly positive. As we've spoke about the last two NFPs, once the US job numbers fell, weekly job numbers fell below 1 million, it's managed to stay there, which is a good indication that it will remain and hopefully get back to a lower setting. So last month's 1,371,000 NFP figure showed a gradual slowdown from June's record. So what we've seen over the last few months is we've had, you know, the record number of jobs in the American economy, but that was obviously on the back of the record low. So it was quite an easy indication to know that it was going to be a very high figure in June. And as we can see, July has declined slightly, and then August, and then it's expecting another decrease today. So it's not such a surprise, but we'll see how it goes as we get closer to the news release, which is in 25 minutes. Adp Figures vastly missed expectations. This was probably the only good thing coming out of the week. So private businesses in the US hired 749,000 workers, which was, it beat estimates quite a lot on the 650,000 number. So this is the highest in 3 months as well, so that's quite a good indication. But all in all, unfortunately, the economy is looking to kind of slow down, or it's expected to, in the next month or so, or as we get into the Q4 and we lead up into the new year. So we'll see how that goes as well. Okay, so this is a continuation of the analyst expectations. So unemployment rate, the expectations is less optimistic at 9.3 than 8.4. So again, a sign that things may slow down quite significantly. Beat expectations last month of 9.8%, which is quite significant as well. So hourly earnings grew by 0.4% or 11 cents. And so there are good things and bad things to take out the last couple of months of job data and NFP revelations, but we're going to see as we go into, as I said, Q4, to see how much we can get out of the last couple of jobs reports, to see if it's going to be positive going into the next one. As I said before, it's the penultimate NFP before the presidential elections, so as the debates have started, we're going to see a lot more friction between the two candidates, and this could start moving the markets even further. So we'll have to see, based on the news that we receive in the next 20 minutes, how it's going to pan out. So, and wages are expected to rise at 4.8%. This is another good factor as we go into the jobs report as well. But again, if wages rise, then that means and companies aren't back on their feet, then it could lead to a lot more redundancies, because companies cannot afford to pay employees their usual wage or salary. So then the merry-go-round goes again, and we might see more redundancies, more unemployment claims, more jobless benefits, and we start again with the whole cycle. The latest CPI inflation increased to 1.3% and improved compared to the previous 1% figure. So as we can see, this is a nice steady incline up to previous levels, that we saw before the pandemic. So again, very, very interesting to see. Okay, just take you through some lagging and leading indicators now. So we've got the manufacturing and non-manufacturing that is produced every month. Jobless claims, this is weekly. ADP, as I said, a very good ADP result. Well, the last one, sorry. It beat expectations quite a lot. The private sector had a lot more jobs. So that was a very good indicator going forward. The University of Michigan, this is very important as well, because it's been around for 60 years. Again, it's a very good confidence report to see how the economy is going to go into the next quarter and even the next year as well. And then you've got leading indicators, treasury yields, crude oil prices, and equities as well. So let's just go on to the table that we've seen in the last month or so. So up until the indicators that we can see up until the last report is that it's more positive than negative. We've got a little bit higher in the ISM manufacturing. Jobless claims were a little bit better than before, keeping under that 1 million mark as well. ADP non-farm employment, that was pretty good. University of Michigan consumer sentiment was pretty good this time, and the consumer confidence is getting back on its feet as well. We still have some doubts over the retail sales, with certain restrictions and lockdowns and everything like that. You're not expecting retail sales to really get back on its feet anytime soon. You've got ISM non-manufacturing, which is still in the red from last week as well. This was actually a little bit of a typo, apologies for that. So we actually had a positive sentiment on the ISM manufacturing. Now, these three I want to kind of touch upon mostly, because as of this morning, these were all in the positive, they were all in the blue. But since we've heard news about President Trump having the coronavirus, being tested positive for the coronavirus, we've seen that oil has dropped a bit more. Oil was dropping anyway due to fundamental news, but now it's dropping even further. Equities has sliding today, and so are Treasury yields. So is this an indication that the market does not like what it's hearing with a president having coronavirus? And obviously being the age that he is it very detrimental? Will Mike Pence need to take over the remaining presidential debates? The next one is on the August the 15th, which is a couple of weeks away. There is time for him to not be in isolation anymore, but is he going to be fit and well enough to come out of isolation and, you know, get back on the campaign trail? It remains to be seen. So the markets haven't reacted too positively for that. To that news, his Democratic rival Joe Biden has confirmed that he will also be taking a test today, since that he was in close contact with President Trump on Tuesday for the presidential debate. So very, very interesting, and it will be remains to be seen what's going to happen in the next couple of weeks. And as I said before, with the run up to the elections, very, very close, looming, very large. Is everything going to be okay in terms of the president's campaign to show America that he deserves another 4 years in the White House? So just to touch upon the interest rate differentials, no major changes on the major economies in the world. We're seeing that, you know, Switzerland are still down on a negative, the lowest that is. And economies that in like the US, Canada, Australia, New Zealand still trying to remain high, higher than zero. So the Bank of England in their last news release said they could look at tentatively cutting the interest rate even further into negative values. If this remains to be seen, it's going to be very, very choppy for the British pound, especially with all the Brexit drama that it's had in the last couple of weeks. Obviously, with the Brexit stalemate, with talks not going any further with the last day today. So we'll wait and see what the next load of information is on that. So just want to take you through choosing the best pairs to trade. So this is just the currency strength meter that we sometimes just touch upon to see what's going to happen and what is happening currently with certain currencies. So as we can see, pound, dollar and yen out of the majors doing pretty well at the moment. Could be doing better, but doing pretty well compared to the Euro, Aussie, Kiwi, Canadian and Swiss. Obviously NOK and DKK are exceptions. So, you know, out of the majors, those three are looking the best. So to put this into context, if it's a bad jobs report for the NFP, an early indication, a good position could be against the pound or yen, since these two major pairs are looking strong at the moment. If the jobs report is positive, then a good position could be a buy against the Swiss franc. So, you know, we're expecting the dollar to go up if there is a good jobs report. And since the Swiss franc is the weakest of the majors that we're seeing, then it could be more detrimental against the Swiss franc than it could be against the pound or yen. The pound is looking pretty strong at the moment. There are some talks going on. As I said before, the Brexit talks are coming to a bit of a stalemate. However, the European Commission have said they haven't ruled out continuing the talks further should it be necessary, which it probably will be necessary. So before we go into any technical arrangements, I just want to take you through a few things that we always go through on every NFP, just to remind our clients and beginner traders what we look for and how we protect our clients. So, you know, if you're a new trader or you don't know about trading high impact news events, then avoid trading the NFP. The NFP is probably one of the most fast and explosive news events that you can get on a monthly basis. There are others depending on what the news is about, but because we know the NFP is a monthly first Friday of the month usually news release, then we are prepared for it and we know when it's coming. Obviously, if there is something detrimental in the news that it can happen at any time, then obviously no one is prepared for these kind of things. But the NFP is something that we can prepare for and, set stops, set limits to make sure you're protecting your capital. And like point number 1 says, it's got high volatility and the effect could lead to losses that exceed profits. Apply protective stop loss and take profits. So like I just said, make sure that you don't get into an emotional roller coaster when trading. If you have maybe accidentally not set a stop, it'll be good if you can put in your risk management to make sure you're not losing more than what you want on this given news release or in a given day, depending on what your targets are, daily, weekly, monthly, or even hourly. So close out all positions, if any, ahead of the release and attempt to divert from high volatility and range risks. So if you just want to focus on one major event at a time, it's probably best, instead of having 5 events going on at one time. Obviously we haven't got eyes everywhere, so it could be very difficult for some clients, some traders, to always have more than one position open that is of a high impact persuasion. Hedge your positions, if any, ahead of the release in case your risk is minimum because you trade long term and the stop loss is far from being hit anyway. So hedging, it can be beneficial or it could be detrimental, but always make sure that if you are hedging, again, use your risk management to make sure that you're not exceeding your capital, and so you won't, as I said, won't get into that emotional roller coaster or hit an emotional hurdle. If you are eager to trade despite the warnings, do let the markets calm down before entering a trade. This way you circumvent the heated environment and also have a clear picture as to where the markets could be heading towards as market noise is reduced. So basically that's just reiterating the previous statements where let the markets calm down. Like the NFP usually lasts for, it's usually quite hot, let's say, in the first few minutes of a release, and then once the markets calm down a bit, we could get a few more spikes, because then there is the fact that the market might want to start propping up again, and on some of the information, we might get bears and bulls fighting against each other, and then that will push the markets up or down. So usually it is good to wait probably about 30 minutes after something like the NFP if you want the markets to calm down a little bit. And then analyze the post data release. So this is just basically, again, reiterating what I just said in point 5. The post data release is once the data is out, we can digest it, we can see if it's going to have any ripple effects in the market. I said just now it usually takes about 30 minutes for the market to calm down fully, but there could be that surprise where the market is going to start waking up again. And let's say if it's a good NFP, the dollar goes up, let's say 30, 40, 50 pips, there's always that chance that it could reverse after 10, 20, 30 minutes. So there is this risk as well. And then pay attention to divergence between action and consensus. So gaps of 20, 30k are not considered much effective. So if the NFP comes out of, a small jobs number, it's not necessarily something that's going to move the market that much. If it is something unexpected, if it is something that traders are not aware of, then we could see over 100 pip move, let's say. But 20 to 30,000 jobs is not really considered something very big. So we can't get too excited about it, basically. Okay, so that's the end of the webinar. I've just taken a basket full of the main pairs just to have a look at what's going in the market. So I've gone down to the 30-minute charts, and I just want to see what the potentials are at the moment. So to get a clearer picture, so let's start with the euro dollar. So we've got just under 10 minutes to go before the NFP release, so it's a good time just to check a few charts. So as we've seen with the euro dollar, we've seen this upward channel for the last couple of days, and then we've seen this downward channel as well. So from here to here, let's get that, from here to here, and then we saw this kind of peak, and now we're going in a downward spiral. So I'll just bring that out so it's a little bit easier to see. So, you know, this kind of uptrend was going for the last few days. It's kind of tried to break out. There is a channel here, an ascending channel that I've seen, and now we're going to a descending channel. So, you know, it's very, very interesting at the moment if we can see a bit of a breakout on this area to push it higher and go up to the levels of about 117. If I bring it out to the 4-hour chart for euro dollar, you can just see now how far it's fallen from when we hit the dizzy heights of 120, which was at the beginning of last month. So there is potential to test these regions again. So what I'll be doing today, so let's go to the 1-hour chart. What I'll be doing today is just delete this. So what I'll be doing today is looking to see if we can hit this level, 117.69. So at 117.25 at the moment, it's not impossible, you know, depending on the job data. If it's a bad jobs report for the euro dollar to start pushing upwards and hitting these levels, I'll be interested to see if we can get past roughly about this level, which we've seen in the past, some false breaks, you know, some attempts, and then we've actually seen a couple of candlesticks move in out of that zone, but it's pulled back on the resistance. So it's gone down, and now we're trying to see if it's going to push back up again. So if it's a negative jobs report, I'll be definitely expecting it to reach at least 117.47, about 20 pips away, and then do another 20 pips, and this could be done, I would say it could be done in the first 5 minutes after the news event. So very, very interested to see that, based on the early news that it will be a little bit of a detrimental jobs report coming out. So again, I'll just put it back to 1 hour to get a bit more of a long-term perspective. So again, the pound dollar has been very, very choppy since the end of last month, or basically this week. We're seeing now that, you know, spike, and then it's gone up. You know, we've seen this kind of resistance here, and then we're going to see if it can again hit this. Let's just zoom in a little bit. So what I'll be doing on the NFP, again, if it's detrimental for the dollar, spike up, at least spike to 129.60, 70 region. Again, only 20 pips, which is nothing during the NFP, and then we'll see what potential the pound dollar has going forward. So I will be looking at this level, and then possibly another test at this spike at the 129.78, 77, which again is, you know, 30 odd pips, which isn't really a lot. So if we can basically break out of that, just zoom in a bit more, if we can break out of this spike that we saw before, this false break, then I fully expect it to possibly go even higher, up to the previous levels that we saw in the middle of September. So very interested to see if that's going to happen. And this is based on the numbers that the figures that we're getting in before the NFP has been released. Dollar yen, very, very choppy, consolidating in this range after the fall earlier in the day. So again, we're seeing a bit of a weak dollar across the board at the moment. And will it continue into the NFP as we go in to the last 5 minutes before the news is released? So bring it out on the 4 hour at the moment, so we can see the levels that we've had, You know, we've got this V-shaped attempt to get back into this zone here at the 106.20 mark. You know, even the 106 is a good level to look at. But since we got this detrimental bearish movement earlier today, then we could see markets fall even further. So I would be looking probably if we can test this region again, 107, sorry, the 105, low 105 that is, and then fall under 105 at 104.93, 104.90, something like that. So that's again 20 pips away. It's more than doable based on the jobs report coming out. If the dollar yen has a chance of reviving today, then I'll be looking obviously at the top of this candle, the 105.54. That's 40 pips away on the upside. Depending on the jobs report, like I keep saying, it remains to be seen if it can be done. So just a quick touch on the dollar CAD as well. Obviously news on the CAD coming out as well. So the dollar CAD in the last session has been quite bullish in this range, obviously an ascending channel breaking out at the moment. It's hitting a bit of a resistance now on the basis that we're seeing the last candle, the bottom of the last detrimental candle, which was at the end, or a couple of days ago on 30th September at 133.22. If it can push its way above 133.22 and hold, we've seen some false breaks here, as you can see. If we can get above the 133.22 and it won't be a false break, then I expect it to move back upwards. And the first level obviously will be at the 133.55. So I'll be looking at that as well to see what potential the dollar Canadian has in store for us. Downside, because there is potential for it to go down, it's at 133.05 at the moment. You know, if it can't hang on to the 133 handle, then it can have another drop down to the mid 132.80s, I would say. So I'll be putting it around there. Let's put it 132.90. So it's a bit of a psychological level. Okay, a couple of minutes before the jobs report. I just want to take a quick look at gold to see how that's performing. As we've seen in the last few days, it has had some momentum. As we can see, it's dropped right down to the mid 1,800 range, which was pretty low. You know, it was the lowest since the middle of July. So it's trying to shake off that negativity. Obviously, with fundamental news happening around the world, risk aversion has bounced back, and now there are a lot of bulls in the market with gold. So we're just waiting to see how the NFP results will affect gold, if they will affect gold, that is. And then I'll be fully expecting to see a continuation to the upside. That's my first level if the market does reverse a bit, which would be about here, 1890. If we can get this confluence of the low and this ascending channel here, so roughly about 1891, 1890 would be a good level. So let's just see if any markets are moving at the moment, because the numbers are going to come in soon. Just waiting to see the results. I've actually got a monitor behind me, directly behind me, so if I do turn my head from time to time, it's not that I'm ignoring anyone. I'm just just looking out for the NFP results. So yeah, just another minute or so to go. Just waiting for the results now. No serious signs of any big movers at the moment. Let's just zoom out on the pound, zoom in on these ones just to get a bit more perspective. Okay, we see some of the pairs bouncing around as we go into the event. Okay, US manufacturing payrolls rise by 66,000 in September, so that's quite a good indication. Hasn't really affected the markets that much though at the moment, so we'll keep checking. Keep checking what the story is. So unemployment rate falls to 0.5% to 7.9%. So you can see that all the indices are falling quite significantly. As I said before, this could be in the back of the news of President Trump. Oil is still dropping as well. So we've got not a bad NFP, I would say. It could have been a lot worse. As we go into the session, so it's a bit of a non-performer at the moment. Just waiting for something to spike. Let's just have a little look on gold to see where we are. Again, that's a pretty slow mover as well. So compared to last month, at the moment, the first couple of minutes after the NFP, it's a very quiet result, let's say. We're just waiting now to see if there aren't going to be any ripple effects to the news as we go into the first 5 minutes post data. So September payrolls rise 661,000, the estimate up to 859,000. So it looks like for the currencies it hasn't really been too much of a shock. It's been more of a day of the indices, the US indices kind of collapsing, not collapsing, but having a bad day, let's say, having an ugly day. S&P futures 1.31% down, Nasdaq nearly 2%, and the Dow Jones 1.3%. So, you know, the Nasdaq was doing pretty well yesterday with the news of, you know, the 5.5% rise in Netflix shares, but today that's probably been wiped out altogether. So we're just going to see how that's going to have an effect on everything else. We're going to see in the next 5 minutes if there's any real ripple effects. Again, gold is not really moving at all. It's going into quite a flat doji. So it looks like to me that the news of Donald Trump is more of a fundamental outlook or fundamental news release than the NFP today. It would have been interesting if nothing happened with Donald Trump to see if the markets would have moved a little bit more on the back of the NFP, but it seems that it hasn't really. It's been a bit of a non-performer. US manufacturing payrolls rise 66,000 in September. So, as I said, it's been not a bad NFP for America. Earlier indications were in that it was going to be very detrimental, but it looks like it's hasn't been that bad for the dollar. Now we're seeing some signs of movement on the downside for the pairs against the US dollar. So if we focus on the pound and the euro, what I'll be seeing is if we can touch these false breaks that we've seen on the euro dollar. I will just expand that since it's one of the main ones moving at the moment. Let's go to 1 hour chart. So, you know, I'll be looking at this spike and then this spike and then this spike. So we've got like a bit of a three-way spike here. And this is what I'll be looking for the next 5 or 10 minutes to see if the market can really make something out of it. So yeah, the unemployment rate falls 7.9 to 7.9%. The estimation was 8.2%. So there is a bit of a good vibe, let's say, coming out of the NFP rather than last month. So I'll just minimize that as well. Let's just take a quick look at the pound dollar. And the pound dollar, again, it's looking like it wants to fall a little bit. So again, a little bit like the euro dollar, we've had, you know, spike here, spike here, spike here, and even another spike down here. So the first level will be at, you know, the 129 area, which is about here. If we can get past this level, then there are other levels that we can see, and hopefully they can be touched, and we can see further downside. But that remains to be seen because the markets are pretty flat at the moment for an NFP release. Let's just take another look at gold. Gold is starting to move a little bit now. So we've seen in the last let's just take the last 15 minutes, shall we? So the last 15 minutes we've seen about a $5 to $6 movement. So as long as it doesn't enter this region here, it should probably remain elevated and maybe try an attempt to go past its spike that it's seen just now, and also the previous spike of 1,912, and then further up at 1,917. So this is a good indication as well of where we want gold to go, based on the recent ascension that we've seen in the last few days. So we're just again still digesting the news from the NFP data. But yes, it seems like the story with President Trump and Joe Biden needing to take a coronavirus test seems to be, let's say, overshadowing the NFP news at the moment. The main news is probably the fall of the indices that's been happening since the morning on the back of the news, and oil as well. Oil has also been moving a little bit. Let's just take a look at some other. Let's take a look at oil quickly. So oil at the moment, we'll just bring it to. So yeah, we've had this descending. And we're just waiting for oil now to see if it's going to pick up or not. Very, very easy level to see there, going lower. So, you know, the highs that it has been at, it's a very easy indication to see that it's on the downside there. So again, I will personally be looking to see if we can get anything higher than, you know, 37.30, 37.40 around this area, and yeah, okay, let's bring it to 37.50. So it's quite a psychological area at the moment, so that's dropping down to the low 37. If it can get goes any lower, then I fully expect it to probably start hitting the levels that it was at the previously in September. And then you've got other levels as well going down to the low 34s. It's very, very easy to see that. Let's just take a quick look at the Nasdaq to see what the hype is about at the moment, with some of the indices moving lower. So again, from the let's say from the morning period, from the European morning session, since President Trump has announced he's infected with the COVID on his Twitter account, we're looking like it's going to keep pushing downwards. So for a lot of the indices are running at the same levels, so I'll be looking to see this kind of level at the moment, which was the last dip, and then possibly another dip by the end of the session. This could all happen today because it's very, very bearish at the moment. So bears are in the market, especially on the indices, and this could collapse it even further. So I'll keep an eye on that. So I'll just close these to the moment. Let's see how the basket of currencies are doing as we go into almost the last quarter of the hour. So as we can see, the euro dollar has been, let's say, attempting to hit this trend line, this ascending trend line again. And if it does hit and break, I fully expect it to drop to the 116.83 region. But that remains to be seen, since it's not really moving in big waves. It's moving like a pip at a time. We're not going into 5-10 pip moves. We're going into like 1-2 pip moves at a time, which indicates it won't really break out into anything substantial in the next 5, 10, 15 minutes. So we're just going to wait and see what happens with that. And then again, the pound dollar not really moving the same way as the euro dollar. That's actually got back on its feet and is looking like it's going to keep moving upwards now. So now that it's got a hold on its candle, this is 30 minutes as well, which is even more significant. The hourly candle is looking in its favor to push up further. So we're going to wait and see in the next couple of minutes if it can maintain. So it's just done a slight double top there in the last couple of hours. So if it can get past that resistance, we've got this spike here. And like I said before, the 129.77 would be a target that I'll be looking at, or at least 129.73, I would say. I wouldn't really get excited about the pound moving any higher unless it gets to that mark, and then we can see if it's got potential on the upside to go even further. So on the downside, it's ranging at the moment. Obviously, the lower 129 seems a little bit far away now. It's, as you can see, it's very, very undecided at the moment. It's gone into a full doji. Now it's gone a little bit on the downside. So a very indecisive pair, the pound dollar. It looks like it's just waiting to either get to the top of that candle or the bottom to see where it's going to go from there. Dollar CAD is probably the best performer out of these four that I've chosen today. It's actually got had a bit of a move in the last 15 minutes, but just before that we had quite a big candlestick on the downside, so it's kind of recovering from that, and then we'll see further if it can reach this area of 133.22 and then attempt these other false breaks that we've seen recently. And just to touch on the dollar yen just one last time. Again, it went to 105.32. The obvious level was 105.28. If it can maintain above that, which it didn't do, so we've had a bit of a false break there, and now it's ranging again. So lots of ranging here in the last, well, let's say pretty much most of today's session. If it can't decide what it's going to do, then I expect it to keep ranging from the 105.28 to probably 105.10 for the rest of the session. Hopefully we'll get a bit of a breakout or an indication, but to basically make up this loss today, I don't see it happening. It's only 30 to 40 pips away, but it just seems like the market is very, very undecided at the moment of what direction it wants to go. So the Canadian, like I said, 133.22. I'll be interested to see if it can break that level and maybe get another double top, and that will turn into a triple top. So we've got 133.20 at the moment, 133.28. Obviously not a lot of pips to go, but in this market at the moment, this flat market is not really performing very well. So let's go back to gold, just to have a look. Again, very undecided market, very indecisive, not really knowing which way it's going to go. And this is an indication of a bit of a sellout, unfortunately. But you know, there is still many hours of the trading day left. There is no bank holiday this weekend like there was last weekend with the US Labor Day. So we could see a bit more fluctuations as we go into the evening session. As you know, as we close the European session, go into the American session, and see out the rest of the trading day. And let's just touch on the Aussie dollar just before I finish the webinar. So Aussie dollar, I just wanted to touch on because it did have a little bit like what we've been speaking about with ascending channels. I noticed this earlier, well, the last week or so. So we've got this channel coming on the outside, on the upside. It's touching, had few attempts to break out, and now it's coming back down again. So what I'm looking at now is just to see if it's going to keep pushing downwards in this channel. So let's just zoom in to get a bit of a better perspective. So what I'm looking at now is if it can get past this level here, 71.20, 71.30, then there is the potential to break down further. Let me just zoom out to show you. So we've got this level, 71.30. Then I will be looking at probably about this level at the lowest 71 cent area. So it was a very good performer, the Aussie, against the dollar in the last week, but we've seen a bit of a decline since then. So I'll be looking at this in the next few hours and even on Monday as we go into the weekend, because obviously, as we know, the trading environment doesn't stop just because it's a weekend. So just one last look at everything. Dollar CAD, as we said before, good performer on this one. It's just going to try and test this 133.22. If it can, then I'll be looking at these false breaks here. And on to the dollar yen, very, very undecided. Again, I expect it to keep ranging. If it can't test this spike again at 105.28 roughly, then maybe 105.30 maximum, then it's going to probably range until well, at least the next couple of hours. So yes, very, very undecided. And pound dollar, again, it had the potential to start collapsing lower to 120, the lower 129 region, but it hasn't done, and now we're probably looking to see if it's going to hit all these potential spikes, 129.47, 129.52. So I'll be looking at that, and then we've got the other levels that we spoke about earlier as well. And then finally the euro dollar. Now that it's hit this trend line, we've found some resistance at the moment. So it's just having a bit of resistance there. Very, very interesting to see if it can break. Doesn't look like it's going to, but if it does, then we've got potential for further downside. If it breaks, I fully expect it to get to the 116.83 region at least by the end of the trading session. If it, as I said, if it does break. If it doesn't break, then it's got to claw its way back from the downward spiral that it's made today in the last the last 30 minutes, and then a potential to go up to the mid 117s, which we've seen in the last day or so. Okay, it's breaking down now. Very good indication there. So like I said, next target for me personally would be 116.83 to see if we can get any further downside. So if it doesn't hit any more resistance here, further downside is expected. So that's all from me today. Thank you very much for joining me on this NFP report. It's been a bit of a non-performer, I have to admit, but there is potential for the rest of the afternoon if we can see a bit more of a downside on these major pairs at least. As you can see, the market's starting to pick up a little bit. So the next couple of hours, as I said, these ranges that I've been seeing, so if like the dollar CAD, we've gone through the 133.22, next target 133.28, like I said. Now we've made a triple top. Can it get any higher? We have the rest of the trading session to see. So very, very good indication there for further upside. And again, the euro dollar finding some resistance there. Dollar yen very undecided still. Pound dollar looking like it wants to break out, but just forming a double top, and there's another double top here, so we'll see what's happening with that. And just to touch on gold before we go, again, a bit undecided as well. So thank you very much for joining me today. If you have any questions, feel free to leave them on the YouTube video or the blog, and I'll get back to you as soon as possible. And have a great weekend ahead. Goodbye for now.